Okay, that we continue with employment. So we stop here with share scheme. Okay, now see, when you're offered share scheme, now there are many ways how share scheme can be. They can give you an option that you can buy share at a lower price. Okay, they can have, for example, give you free share. Okay, they can give you cash in lieu of share. So there's quite a number of share scheme. Okay, now we look at the normal one first. That usually we have an option that you can buy the share. Alright, the one that you can buy the share. Okay, now whether you buy the share, you get the share for free, eventually we got to tax all of it. Everything is taxable, and all of these are regarded as perquisite. Now just that if you need to buy the share, then we got to use a formula to work out, okay, how much is the income that we must assess about. See, the formula generally for option, it's actually we take the market value when this option become exercisable. Okay, become exercisable. So exercisable means the day that you are able to buy the share. Alright, so the day that you're able to buy the share. So exercisable. Now, and then market value when you exercised it. So exercise means you actually bought the share, the day you bought the share. Now you must compare the two market value and choose the lower. So how do you derive market value? Now if your company is listed, then the market value is easy. Alright, so listed company, quoted one, we take average. Now so far in the exam they don't test how to get average. Okay, but average is the highest lowest divided by 2. Alright, so I just put H plus L divided by 2. Okay, take your market value on the trading day, highest lowest divide by 2, so you get that as an average. Now if the company is unquoted, if it's not listed in the exchange, then the market value equals to the net tangible asset per share. So you got to calculate yourself what's the NTA. Okay, now so this is what you do. You choose the lower of the two, and you minus with the exercise price, the price that you need to pay. Okay, the amount that you need to pay, the amount paid for the share. Now that will be the gain. Okay, so the gain multiplied by the number of shares you acquire, that's the perquisite. Now we will assess you in the relevant period for the YA when the option is being exercised. Okay, so this is assessed when it's being exercised. Now you see the issue about gain from share scheme. Now you can actually exercise a scheme. Okay, you also may assign it. That means you can transfer it to another person, and a scheme can also be taken back, so they redeem back from the worker. Can you see or not? Now, so you look at this example over here and see what happens. Okay, now Hogan has been granted option to buy 50,000 share on 1st of February 2010, when the exercise price and the market value is 2 ringgit and 380. Okay, now so the exercise price is important. EP is 2 ringgit. Okay, now they say that when this option granted, the market value is 3.8. Alright, now if they don't tell you about exercisable, then that's the market value we're going to take. But then if you read on, you see they mention that this option is only exercisable beginning 1st of July until 30th June. Now that is the date that it become exercisable. So 1st of July 2010. So the market value that we need is the market value it become exercisable. So which is the market value on 1st of July, which is 4 ringgit. Now Hogan exercised to buy 10,000 share on 20th of August 2010 when the market value is 5.5. So when you exercise this, now this become a perquisite, you got to work out how much is the value. Now then they also mentioned that Hogan assigned 10,000 of the rights to Jimmy his colleague for a payment of 30,000 on 1st April 2011 when the market value is 5.3. Okay, now so this is where you transfer away to another person, that is 30,000. Okay, now on 5th of March the company been acquired, and all the remaining option that Hogan has not been exercised is all taken back for a payment of 50,000. all right, now there are three different issues over here. So the first issue that we're going to see here, right, so to do with Hogan. Okay, now we look at the one that in 2010. all right, so the one that he exercised in 2010. all right, okay, market value when you become exercisable is 4 ringgit. Market value when you exercise is 550. So the lower is 4 ringgit. Now exercise price, I just write short form so faster lah for me. Okay, so the exercise price is 2 ringgit. So the gain per share is 2 ringgit. Now you acquire 10,000 share, right? So there will be 20,000 ringgit. Now this will be accessible in 13(1)(a) in YA 2010. Okay, now that's the usual thing that we always see lah. Okay, follow. Now see, when it comes to the second case, instead of exercising his rights, he is like transferring it away for a value. So in that case, whatever he received in return, that become taxable bequeath. So in the second case, when he transfer or when he assign the rights, you will see that in 2011, 13(1)(a) as well. Okay, so the bequeath for the rights assigned is 30,000. Okay, so whatever you transfer away, the value you get back is what we assess. And then there's no formula, just get back whatever amount, that's the amount we assess. Okay, now then you can see in the last case in 2012 that these rights has been released. So for the release of rights, whatever amount you get back for the release of rights is also become a bequeath, taxable based on whatever amount you receive. So in that case, when you find that the release of the rights 2012 13(1)(a) 50,000. Okay, now that's how you deal with the figure. All right, okay, now besides operating share scheme like share option, they may also operate this kind of thing called cash equivalent of share. All right, I just go back to the handout. Okay, now what is this thing called the cash equivalent of share? Now that means instead of giving you the share, they will give you the cash. Understand? Huh? Instead of giving you the share, they give you the cash. Now let's say for example, okay, so e.g. that the employee is awarded, okay, a cash equivalent of share up to 5,000 share. Okay, now the amount is paid on, let's say, 19th of October 2013. So at that time, market value is 3 ringgit. Now effectively, the employee will not get share, right? Cash equivalent of share. So the employee will get cash, correct or not? And the cash will worth up to the 5,000 share times 3 ringgit, because you have been promised to get an equivalent of 5,000 share. So you're going to get 5,000 share, and at that time the market value is 3 ringgit, so the company will pay you 15,000. That 15,000 will become accessible in 2013. It's income under 1318. Follow? Okay, that's called cash equivalent of share. Now we also have ESPP, Employee Share Purchase Plan. Alright, now take another example. Employee Share Purchase Plan. So basically for ESPPs, they would like you to take an installment. Alright, so instead of you pay all the money up front and so on to buy the share, they allow you to take salary deduction. So usually that's what they do. So for ESPP, they go through salary deduction. Now because it's salary deduction, it will stretch over a long period of time. So it will not be immediate. Yes, you know, it will be stretched over a long period of time. Now let's say for example, so on the 10th of January 2013, you have been given ESPP. Alright? Now, it's not relevant, okay? It's not relevant, but I just want to put down so that you can compare. Let's say at that time, the market value per share is 2 ringgit. Now, so each month we will deduct, let's say, 1,000 from your pay for 10 months. Alright, so every month they deduct 1,000, 1,000, 1,000 for 10 months. So let's say on the 9th of October 2010, okay, the end of the 10th month, you've been transferred, let's say, 10,000 share, and that time the market value is 2.4. So in this case, again, how do you work out the value of the perquisite? Alright, how do you work out the value of the perquisite? Now you see, the issue is when you calculate this kind of option scheme, you need to know what is the market value when it becomes exercisable, what is the market value when you exercise. Now, but in this case, you will find that exercisable and exercise will fall on the last day. Okay, so there's no difference between exercisable or exercise, because you will only get it after you complete off the whole installment scheme. So that's why to them, the exercisable is exercise. So in this case, just take note, exercisable equals to exercise. So when they grant this thing to you in January, the market value is not relevant, okay, because this is only the date granted. So what is the market value of this share when it's exercisable? Now is 2 ringgit 40 cents. And what's the market value when you exercise? Also 2 ringgit 40 cents. Because when it becomes exercisable, that's where you finish the installment and you get the share. So in this case, your market value is 240. Follow not? Okay, just one value only. Now then your exercise price, okay, I just multiply with 10,000. So 24. So your exercise price is the 10K you pay over the 10-month installment. So this is 13(1)(a), 14,000. Okay, that's how we assess the gain. Follow on. Alright, now this is how you deal with share option. Okay, so these are some of the issue that you watch out. Now all the while we don't discuss so detailed, but because there's a ruling, so you probably expect examiner may go into all that. Okay. Alright, now just turn to page 365. Okay, now we move on and look at 13(1)(d), 13(1)(e), sorry. Okay, now take a look at compensation for loss of employment. Okay, 13(1)(e). Now, see, when there's a loss of employment, the amount that you receive being a form of compensation, exemption can be granted, alright, in these cases. Now, we will give exemption. Number one, they say, a payment other than payment by control company to director that is not whole-time service director. Now, that means the exclusion is if you are a non-service director of control company, because the exemption say other than this person. So that's why if you're a non-service director of control company, you will not get this exemption. So it will not be given to you. Okay. Now, so it says that you don't have it. The hand up. Or you forget to bring it. Anyone don't have it? Okay. Now it says over here that, so other than this group of person, that means non-service director of CC will not get the exemption. Now, when will exemption be given? Number one, if the Director General satisfied that this payment is due to ill health. So it's simple. So once it's ill health, you get full exemption. Okay, just like gratuity. Now, B, in the case of a payment made in connection with the period of employment with the same employer or with company in the same group. That's it. They just say if there's a period of employment with an employer. So they didn't give any condition. So you're employed for certain period. That means this exemption will always be given. Is it not? So this exemption is always given. So if you don't get A, you definitely get B. Alright? It will always be given. Now it will be given by not exceeding amount ascertained by multiplying 10,000 times the number of completed year. Now that means we understand that maximum they give you is 10,000 ringgit per completed year of service. So how many years you work, then you're going to get the exemption. Okay. Now, still, there are some cases you must understand that compensation is not exempted. Okay. Okay, NSD of CC is 1. Okay, NSD of CC is 1. Okay, number 2. If this is not a loss of employment, okay, I repeated the same thing. Okay, so I just write here. Okay, it's the same thing. Now, it's not a loss of employment. Now, what do you mean by if it's not a loss of employment? Now, not a loss may include, number one, if this is termination at the end of the contract. Okay, it's a termination at the end of a contract. So, it's very agreed that I will employ you for 10 years. Okay, now it's the end of the 10 year and now you got to leave. Okay, so whether I give you compensation or not is not relevant because anyway it's at the end of the 10 year. So the loss of employment does not apply. Okay. Now, so another example that termination is not regarded as loss of employment if it's a termination at retirement age. Okay, where legally you are not expected to be re-employed, so it's not a loss of employment. Now another example is when the termination is promised with a re-employment prospect. That means I terminate you, but I also tell you that I'll employ you again. So probably it could be a different company, okay, but you will be re-employed, whether it's expressed or implied, that the termination is with a prospect of re-employment, whether it's expressed or whether it's implied. So there's no difference. Okay, now in this case you realize that the compensation will not be exempted. Okay, now we look at the illustration here. Now Chai been working with AB Sdn Bhd since October 2004. Now AB has recently been acquired by EF. Consequently, Chai been reassigned from his present position of general manager to admin manager. Now he argued that this is a constructive dismissal, and he stopped work on 30th of June 2012. Now Chai filed a claim against AB, and court awarded him a compensation of 150. Alright, now we see the issue is Chai filed for a claim and he has been awarded a compensation. So there's a loss of employment. Now when will this be assessable? Now it will be assessable when this amount become receivable, right? Now that means it's only until the court award it to you. If the court does not award, you will never get the 150. Right? So that's why in that case, it will be based on 2015. Yes or not? So you will see this in Y 2015. Now under employment 13(1)(e), right? Your compensation. Now the amount of compensation is 150. Okay, so this will be given an exemption. But when you want to work out exemption, the issue is you take 10,000 times number of year. So what's the number of year that Chai been employed? Now Chai stopped work on 30th of June. So you will calculate his period of employment from October 04 until June 2012. So how long is that? So October until October 05. So 5, 6, 7, 8, 9, 10, 11. Now then 12 is only until June. So that's why it will be 5, 6, 7, 8, 9, 10, 11. So there will be 7 years. 7 completed year. Now, so he will be assessed the tax at 80,000. Alright? Okay, so that's the issue that you got to watch out. When will this be assessed? And how long will you be employed? You must look at the detail of the case. Okay. Now Jerome has been terminated from his employment with KW on 30th of July 2012 after servicing company since 1st of March 2007. Now he's given a lump sum of 200,000 for the termination. Now it is the practice of KW to pay employee a gratuity of 65,000 once they have completed 5 full year service. Now, so if you have a practice, so it becomes constructive that gratuity will be given the moment you completed 5 years. And you look at Jerome's case, 07 you start, right? So 8, 9, 10, 11, 12. Now until February is already 5 years. So you have more than 5 years. That means the 65,000 is understood that Jerome must be given this thing. So in that case, what will happen to Jerome now is you expect Y2012. Now under his employment, there will be 2 things. Okay, one is A, one is E. Gratuity, compensation. Now do me a favor, you fill in the amount for me. Okay, I just see a few person in front, but a small sample probably is representative already. I already see a few answer, alright, gratuity 65. Why gratuity 65? Because the amount is 65. Hello, how do you assess gratuity? Last week only we learned, right? You must check number one, got exemption or not? Got exemption or not? Got exemption? No. There's no issue about exemption, okay? Now, if there's no issue about exemption, then you must check what? You must check how long that you've been employed, right? That's why you must check from 1st March 07 until 31st December 2011. Is this period more than 5 years or not? Yes or no? Is this period more than 5 years? Yes. Oh, my goodness. Hello, where are you all? Huh? Everything? Oh, yes. More than 5 years. February 8, 9, 10, 11. So there's 4 years only. You must get until February 12, only 5 years. So the answer is no. So if not more than 5 years, then what do? You time a portion, right? So you must take 65,000 times what? Because usually gratuity you spread back. Okay? You either spread back 6 years or you spread back over the actual. So in this case, you spread back over the actual. So how do you spread back? Give me the fraction. What over what? On top is 7, right? On top is 7, right? Terminated in July, right? 30 or 31st July, okay? Bottom is 65. Correct now? 10 months plus 12 month, 12 month, 12 month for 8, 9, 10, 11, and 2012 plus 7, so 65. So the figure will be 7,000. Then you spread back into YA 11, 10, 9, and so on. Okay, that's gratuity. Alright, it's scary. Today learn compensation, you forget gratuity. Alright, now, so compensation in this case, same thing. So 200 minus 65, the leftover will be 135, and then you'll be given exemption 10,000 for every completed year of service. So how many completed year of service? 5, no? Fair enough. So 7, so 8, 9, 10, 11, 12. It's only 5 years, so it will be 50,000. So 80. Okay? Alright, that is how you deal with compensation. So I finish off this part to do with 13.1a share scheme. Okay, 13.1e compensation. Alright, now can we turn to page 366? Now a bit more on employment, then I'll move on already, okay? Okay, now you see we have this thing called Para 21 Schedule 6, the 60 days exemption, which I touched a bit when we mentioned DTA. Alright, now so we're now going backwards. Look at this thing. Now the whole idea of Para 21 Schedule 6 is very simple, that if you are a non-resident, okay, if you're a non-resident, and if you exercise employment in Malaysia for not exceeding 60 days, then your employment income will be exempted. Now, but if you look at the law under Para 21, how do they count the 60 days? Now, they only tell us that 60 days can be, for example, in a year, within a year, a basis year, you can have one stretch 60, correct enough? Now you can also have a few periods that you add up together also equal to 60. Okay, now this is how you count the 60. Now then the issue arises is when you have 2 years that they overlap. Okay, so when you have 2 years that you overlap, the calculation of the 60 will remain, that it will not increase to 120 because of the fact that you overlap 2 years. So that's why if you work towards the end of the year, all the way to the beginning of the next year, so you overlap 2 different years, now you also get maximum 60. Okay, and this goes to the case that if you overlap 2 successive years, that you must also add whatever physical day that you have in both the year, that all that must be maximum 60, then you qualify exemption. So that's why for cases that overlap is inefficient. Okay, it's inefficient because you still get 60, you don't get double. So that's why you got to make sure that you leave and then you come back. So if you do that, that's the best way. You leave and then you come back, then you break the gap. Okay, now but these are the straightforward cases. So there are some exceptions that you got to watch out, be careful. Okay, now when we look at the 60 days, the 60 days that we say here refers to 60 days of exercising employment. So the 60 days does not include when you are not here for exercising employment. For example, your contract only counts for a period, but then after that you didn't go back, you extend to stay on for vacation. Now in that case, that will not be taken into account. So the idea will be, for instance, now let's say in a year you come to Malaysia for 58 days. Now that's the contract period that you come down for work. But then since you are here, you decided you want to stay on. So you extended your stay in Malaysia for another 10 days for your vacation. In this case, exemption will still apply. Understand? Because we only look at the 58, where we will not take into account the 10 days. Follow? Okay? So this is for cases that you are here for a longer than 60 days, but you will still be given exemption because you must look at the law. It's only for exercising employment. Okay? Now the 60 days is based on individual, and it's not based on the employment you have with the employer. So you can actually be employed with different bosses, that you come down for different bosses, but the 60 days will still be the same. In total, all of them maximum 60. So imagine like in a year, let's say the non-resident came to Malaysia. Now this time the non-resident worked for ABC. So you come down for 45 days. Now then later on, the non-resident work for XYZ. Now different bosses. But at the same time, the boss will say, go to Malaysia for some work. Now you come down for, let's say, 32 days. So individually, if you look at it, you don't have 60. This is 45, this is 32. So can I use Para 21, apply on both of them, or at least one of them, can or not? Cannot. In this case, both also will not get exemption because in total you exceeded 60. So when you look at this, then no exemption under para 21 because the total period exceeded 60. Total exceeded 60. Okay, right, number 4. Now you see the 60 days that we look at may not only refers to the physical days that you're in the country, all right? Because some people that they understand the law mentions 60 days, so they want to take advantage of so-called the 60 days, so they decided to leave early, all right? So they want to get exemption. Now let's say the idea is this. For example, we have Smith. Now he's supposed to come to Malaysia, go to Malaysia for his work or duty. Now the work or his duty will be for a period from, let's say, 1st of July 2013 until 31st August 2013. Now let's say it will be for this period. Now what happened is Smith left on 25th of August. The remaining period would be his leave. Okay, that's what he's doing. Okay, now so you can see if you look at the stay over here, physically, the guy is only in Malaysia from 1st until 25th. That means 31 days plus 25 days. Now it's only 56 days only. Okay, so physically it's only 56. But the contract is supposed to last 1st to 31st, 62 days. Okay, the contract is supposed to last 62 days. So if you look at a case like that, then you must understand that the exemption will not be granted. That even though physically you only stay for 56 days, which has not exceeded, but the employment period has clearly exceeded 60. So in this case, we are looking at the period. So para 21 exemption will not be given. Alright, these are some cases that you gotta watch out, okay? That maybe they are not so consistent fact. That probably you work longer or you stay longer or stay shorter kind of cases. Okay? Right, so all that is on your para 21, schedule 6. Okay? Alright, now we finish issues on employment. Okay, I'm gonna look at issues on CA right now. Okay, all right. Now, so to allow us to move into what we're gonna discuss, we just look at overall first. Okay. Now, you probably remember that CA is given on your plant and machinery. Okay. So how do you claim CA? You're going to calculate using your qualifying plant expenditure, okay, multiply by the rates, then you get your CA. Okay, now, so what normally goes into qualifying plant expenditure? The cost, okay, cost of plant machinery. Alright, okay, I just use the word installation. Alright, so anything that is incidentally to installation, including if you need to alter the building for purpose of installing the asset. So if you see the word installation is there, okay? Now it's also qualifying. Okay, then there's one more that we call it as the land related costs that you need to prepare a site so that you can install the asset. Okay, now the land related costs, like you can level land, tunnel land, clear the land, cut the land, these kind of things. Okay, now again, why do you do that? Because you need a site so that you can install the asset. Now, but this one is not automatically qualifying. There's a formula that you must test first. So the formula is it will only be qualifying if it does not exceed 10% of the aggregate QPE and itself. Okay, that's the formula. Alright, so it must not exceed 10% of the aggregate QPE and itself. Okay, see that later lah. Now rate wise, we have initial, we have annual. Correct enough? Now initial is given usually when you buy the asset, that you claim them in the first year. That's why it's called initial. Correct enough? That's what you learned before, right? And normally we give you at the rate of 20%. The annual is given every year. This is called annual, right? Annual allowance is given every year. So you just claim until the asset become fully claimed. So fully claimed is what? Fully claimed means your RE becomes zero, correct or not? So you will claim until it become fully claimed, i.e. the residual expenditure is nil. Alright, that's called fully claimed. Okay. Now there's something about the issue on annual allowance is you're allowed to claim all these allowance on condition like you incur the qualifying expenditure. You are the owner at the end of the basis period, and you must put these to use in your business. So when it comes to issue about using them in the business, so AA, there's something about notional, that if you have a particular year that the asset is not in use, okay, if the asset is not in use, you have no annual allowance. Instead, you need to compute what we call as notional allowance to reduce your RE. Alright? You're going to use notional to reduce your RE. Okay. Now, so this is what we normally do for your fixed asset to calculate the CA. You must work out the figure and then you claim the allowance. Alright? Now then you dispose your asset. Okay? You dispose your asset. Now other than those cases where you dispose asset within 2 years from date of acquisition, because if you dispose asset within 2 years from date of acquisition, we have para 71. So that's to do with clawback. So whatever you claim, we claw back. Alright? That means immediately become a balancing charge. Now, so we don't talk about that one. That's a special case. Okay? Now just talk about normal disposal. So if you dispose an asset, let's say after 2 years, you dispose an asset. Now what you need to do is compute what we call as BABC. Correct enough? Okay, how do you compute BABC then? Okay, usually disposal value must be higher of your market value or the proceed. Okay, so market value is the market value when you dispose. So when you dispose at time, what's the market value? And how much you dispose it for, the proceed. So you take the higher of the two as your DV. And you're going to minus your RE. RE is your QPE minus IA, AA, and NA, right? So that will be your RE. Then you get BA or BC. Okay. Now, so the ordinary way of looking at CA is like that. All right. Now we're gonna move a bit further. Okay, we're gonna move a bit further. Okay. Now we're gonna take a look at cases when we have this thing called asset held for sale. Okay. Now this is something new added to the law lah. So you just be extra careful. You never know, examiner might just want to test you a CA question this time in P6. Okay. Now, so I turn to page 367. Okay. Look at page 367. Okay. Now we're going to see the issue about asset held for sale, which is actually an accounting treatment. That because in the accounting standard now you can classify those assets that you wanted to sell them very soon as asset held for sale. You know? So that's why, to be consistent with so-called the accounting treatment, they change the law. Alright? So what they do is, when you have asset held for sale, in the law we deem that there is a disposal. That's what we're trying to do. Okay? So now, asset classified as held for sale, the text deem that there is a disposal. Now, so when you say you deem that there's a disposal, then you will work out BABC. Because every time when you dispose asset, you need to have balancing allowance, balancing charge. So the question now is, how do you work out the BABC? Because this is not a real disposal, right? It could be a deemed disposal, because you know. Now, so the issue can be like this. Now maybe YA12 we classify. Okay, YA12 we classify. Now, possible, endless possibility that 2012 we dispose. So I classify in Y12 and is disposed in Y12 in the same basis period, okay? Or I classify in 12 but dispose in 13. Okay? So now I classify but only dispose in the following period. Actually, or another possibility also is you can change your mind. That you never dispose. So you classify it. Let's say it was not disposed and this asset is brought back to use. Okay, it's not disposed, asset is brought back to use. Now, when you read these things that we're going to go through, remember you must go through my notes as well, okay? So you must refer back to the notes in page 58 for the law, alright? Because what I gave you is a summary treatment, okay? So if you go to my notes, in page 58, now I given you the law. That's the law, okay? So now I'm going to show you the example. The example is to explain how the law works. Alright? Now, so we have a few cases, okay? Number one, look back into your handout, okay? I gave the same page in your handout, number one. Alright, now the asset that they are sold in the same basis period when you classify as held for sale. Okay, they are sold in the same basis period that you classify them as held for sale. Meaning, like what we say just now, right? 2012 I classify, 2012 I dispose. Okay? Alright, now if you sell the asset in the same year, what do? You will find that disposal value of this asset is the higher of the market value when you classify. But usually when you dispose asset, you take market value when you dispose, right? Now in this case, it's the market value when you classify with the actual amount. Okay, with the actual amount. Okay, now I put here, take note for the market value for industrial building, because the law clearly say that if you're disposing an industrial building that's deemed or held for sale, the market value will be determined by the government. So it's not by you. Okay, they will decide what's the market value. Follow? Now, so this is the first case. If you sell them in the same year. Okay, so I'm going to use a short example here. Now ARX has a year end of 31st December. Let's say on 1st August 2012, it has classified, okay, this date is important, right? 1st August, it has classified its office equipment, being held for sale. Okay, classified being held for sale. Okay. Now you bought them in February 2010 for 100,000. Okay. Now the market value on 1st of August is 75,000. Now I give you a few market value right now. Okay, I give you a few market value. So I'm going to take a few cases. So let's say case number one. Okay, let's say that it's disposed on 20th of December 2012 for instance 73,000. Okay, let's say you dispose it on the 20th of December 2012 for 73,000. Okay, so how do you work out the BABC then? Now, in Y2012, right, the year you dispose, okay, the disposal value must be higher of what? Market value classified or the net proceed. So classified that time is 75. Dispose 73. So there's the only figure, so there's the net proceed. So the higher must be 75. So it's about choosing the right value only. Understand? Okay? Okay, so that's the DV. Now you must take DV minus with the RE, right? So what's the RE? Now the RE of your asset will be your qualifying plant expenditure. So this asset you bought it for 100,000. You bought it in YA 2010, where initial is 20%. Now annual is 10%. So you get 30 office equipment. Okay. Now Y 2011, you get one more year annual 10. Alright, so my residual is 60. So we have a balancing charge 15,000. Okay, so this is how you do it. That's the first case. Okay, now see the second case. If you dispose it in the following period, so 12, instead of 12 now, we dispose in 13. Okay, now can I just show back the handout? Okay, now for cases that asset that they are sold in the following basis period after you classify. That means 12 you classify, 13 only you dispose, right? Okay, then the disposal value is taken as the greater of market value at the end. Market value at the end of the basis period asset were classified. So you must take the market value at the end of the year of the classification with the proceed. Okay, now not only that, you must also see how you get RE. Now you need to include a notional allowance. Okay, you need to include a notional allowance. Now, when you go back and read the notes at time, you can just focus on this part. Okay, I just tell you now itself. Now they mentioned that where paragraph 4 apply, paragraph 4 is the case that you dispose subsequently. Okay. Now then they say when you determine the residual expenditure of your asset for the following period, when you determine the RE for the following period, now it shall be reduced by an annual allowance which would have been made as if been in use. That means it's notional. Would have as if is notional. You see not? So that this is not a real allowance, but it's just as if you claim it. So that's why you must charge notional into the RE. Okay? Now, so how to do this? Now we show this example again. Now let's say in case number 2. Now let's say I dispose it on 19th of March 2013 for 76,000. Okay? Simply give a figure lah, okay? Alright. So now YA 2013 is the disposal. 2013. Okay? Now, so what happened is your DV will be higher of market value at what? At the end of classification or the proceed. So this is how you do it at the end of classification. So at the end, that means 31st December 2012, because you classify in 2012, right? So at the end is 31st December 2012. Now if you see my example, I mentioned that at the end of 2012 is 73, right? Okay, so the figure is 73,000. You dispose it for 76. Okay, so the disposal value is 76k. Okay, that's your DV. Okay, so how do you work out your RE then? Now, see, we're going to do the same way. Qualifying plant expenditure, 100. Now this time your claim initially is all the same. Y11 and Y12. Agree? You're still going to claim for 2012 because you still use it. You only dispose in 2013, correct not? Okay, so the disposal is in 2013. That's why you claim 2012. Now just now I didn't claim 2012 because I disposed in 2012. That's why I claim until 11, correct not? So that's why this one claim until 2012. So annual allowance, 1 more year. And the law mentioned that for cases that you dispose in the following period, you will have to work out the RE by claiming 1 additional allowance as if the asset is in use. That means you expect that YA13. Normally you dispose got no allowance one, but this case they say Y13. You're gonna have a notional allowance. So my RE is 50K long. Yeah, 40K, sorry. RE is 40K. So 76 minus 40 is 36. That's my balancing charge. I must do a check, okay? When it comes to balancing charge, always remember that BC cannot exceed the actual allowances claim. Okay? Okay? BC cannot exceed actual allowances claim. So how much have you claimed so far? Now if so far you see the figure is 30 plus 10 plus 10, you claim 50,000. Now if you claim 50,000, then the charge of 36 is no problem. Okay? Now let's say for example, if only I'm just changing the figure. Let's say instead of disposing for 76, let's say I change it to 96 and see. Now if I dispose it to 96, you're gonna get BC as 56,000, right? But you can't have a BC of 56,000 because you only claim 50,000. This is a notional. Now if this figure is 56, then your BC is only 50. Then you restrict. Follow not? Okay? Now this issue about balancing charge. Then when you dispose in the following year. Okay, now we look at the last case over here. Okay, now the last issue is if you bring back asset and use it. Okay, so let's say what happened now is you bring back asset to use on the 4th of February 2014. The market value asset of February 2014 is 65,000. Okay, how do you handle the third situation right now? Now it says that, see, if the assets are not sold after the end of the following basis period after the classification, we will deem it's disposed at the market value at the end following that period. Now there's no proceed, you didn't sell. Okay, so it's deemed disposed already. Okay, now so if it's deemed disposed and later if you bring back the asset into use, then you deem to incur qualifying expenditure at market value when asset is brought back to use, plus you will not get initial. So that's the treatment. Okay, so if that's the case, now we will see two things. Okay, there'll be two things. First, YA 2013. There's a deemed disposal. Disposal value is market value at the end. That means December 2013, following the classification. Now that one is 70,000. Now RE just now we calculated in case 2 is 40. So balancing charge is 30. So there's a BC. Now let's say in 2014 you dispose already. You didn't use it. Let's say 2014, instead of bring back, you dispose, then nothing happened already, because it's deemed disposal. Okay? So then no adjustment already. But instead of dispose in 2014, let's say you didn't dispose and you bring back and use the asset, you change your mind. Now if you bring back and use back the asset and you change your mind, that means in 2014, is considered that you deem acquired back the asset. So the QPE is deemed at the market value on the date you bring back the asset. So it's 65,000. So you're gonna have 65, the market value when you bring back. And then YA2014. Now no doubt if you look at this, it's as though you just buy back the asset, but then you will not get IA. The law say no IA. Okay? You will only continue get your AA, which is 10% of the 65. Now it's not the AA of the original amount. So you cannot say, can I claim back 10,000, which is the amount last time? No, because it's deemed acquired back. So you got to start all over again. Okay, just so you don't get initial allowance. Follow? Okay, so this is how we deal with asset held for sale. Okay. All right. So done with that. There's a new thing. Just watch out, lah. Okay, maybe examiner might just want to test you. Okay, we're gonna move on and look at control sale. Okay. Now, control transfer. See, in law, a control transfer, disposal subject to control, it's actually a situation that you dispose your fixed asset okay, as if is no gain, no loss, so you don't have to compute BABC. You deem dispose at DV equals to your RE. Okay? Okay? You deem dispose at DV equals to your RE. Alright? Now, so what is your RE? Okay, very simple. Let's say, example, A and B are sub C to C. Okay? All the year end 31st December. Now always look at acquirer. Okay? Always look at the acquirer. So now we tell you that B acquired from A. Okay? B buy from A. A machine on, let's say, 19th of June 2013 for 60,000. Now A bought it for 150 on 1st of May 2009. It's just very simple things about disposing asset. So when you sell an asset, then you just need to know the date you sell, the date you buy, how much you pay, and stuff like that. Okay? Now, so if you just look at a simple example like this, later I'll tell you what a control sale, okay? What is called control transfer. Now, if you look from a very normal asset disposal, we look at acquirer, okay? Later I'll tell you the steps, okay? We look at the acquirer. Now, which year that acquirer bought this asset? YA? 19 June 13 you buy means YA? 13, right? Now, if you buy in 13, logically speaking, disposer can only claim CA until 12, agree or not? Because there will be no CA in the year you dispose. So the logic is if 13 you buy, I claim until 12. Okay? If 13 you buy, I'll claim until 12. Okay? Now if you're going to do a BABC calculation, the normal BABC calculation, then what you do is you will take the disposal value and then you calculate what's your RE, right? Okay, your RE will be QPE 150. Now Y209 you got IAAA, okay, which is 20 plus 14, 34%, so 51,000. Okay, Y2010 you got AA, which is 21,000. Now Y2011 you got AA. Y2012 you got AA. Now if you claim all these allowances all the way, you know your RE is 36. See, without learning anything about control sale, just learn about normal CA. You know that when you dispose an asset, you will plug the disposal value and you will put inside the DV there. So in this case, you say 60,000, right? Now, because I dispose of 60, man. So 60 I put here, 60 minus 36. I'm going to get what? Balancing charge, 24,000. Okay, usually it's like that. But now it's a bit special. Because this is control sale. Okay, because this is control sale. We will treat the disposal value deemed to be at your RE. Alright now. Okay? That's what we say, right? You dispose at your own RE. So it will not be 60. It will be 36. Now I'm going to show you the figure as well because there's once Miss Yong asked control sale. But the answer student only explained. She expected student to give the figure also. You cannot just tell me that the DV equals to RE. I know that's the concept. But then how much is that? So the examiner also expected student to say that the RE is deemed to be 36. Like in this case, you must give the figure. Deemed to be 36. So 36 minus 36, 0 lah. BABC is 0, so there's no gain, no loss. Okay. Now, if this is not control sale, what will acquirer do? If it's not control sale, acquirer will claim based on what they pay. So they're going to take 60,000 and then they claim IAAA until you finish. Now, this is what happened if it's not a control sale. But because this is a control sale, we will treat as though that this asset, you are the original owner. That you just continue claiming. That's why we know the RE of the asset left with 36,000. So what happened now is you don't need to calculate IAA, you follow the figure of the original owner. So Y 2013, your AA will be 21. Y 2014, your AA will be 15. And then finish. So you only get 2 more years to claim, 21, 15. Now why 21? Because the original owner claimed 21. And you don't take 36,000 and times 14% again. So it's not like that. You just continue claiming. Follow? Now this is the principle when you have control sale. It will be like that. So if you always look from CA point of view, you find that everything is very easy. Don't need to bother about what rule you see here. Okay, just look at CA. Normally what you're going to do, the only difference now is you change the figure. That instead of using disposal value, we follow back your own RE and it becomes 0. That's all. Okay. Now, so what are those cases that control sale will apply? Now we're going to discuss the rule here. Okay. So this is the principle. Now, control sale or control transfer will only apply when you have one of the so-called control situation in para 38. Okay, schedule 3. Para 38.1, schedule 3. Okay, this one you can refer to page 60 of your note. Alright, so I just write down where to refer. Okay, page 60 of your note. Now you don't need to turn, I just show here. Okay, I just tell you verbally. Now, see, there are 5 situations. In the exam, you must tell me which is which. You cannot just say there is a control. Now, they tell us it can be acquirer, disposer is a person, acquirer has control. That means acquirer control disposer. Disposer control acquirer. It can be other person has control over both disposer and acquirer. See, like just now the example I gave you. I ask you, why do you say there's a control sale? They must tell me the control situation is such that both the acquirer and disposer are controlled by another person. Because these two are sub C to C. So C control A and B, you see. So that is the situation. So you must identify A or B or C. If not, your answer is wrong. Okay. Now, besides the issue about control, like you control me, I control you, or we control by other person, it can also be D, a scheme of reconstruction, amalgamation, or it can also be E, a settlement, devolution of asset on death. Now, this can also be control sale. Okay. Now, you just need one of these situations inside, then it's a control situation. Okay. Now, then number 2. The disposer must have claimed CA. You must have claimed the CA on the asset. Okay, you must have claimed CA. Number 3, acquirer uses the asset. That means you are not buying it because you want to trade it. Okay, you're buying it to use it. Alright. Now the law didn't mention whether acquirer needs to claim CA or not, so there's not a requirement. The disposer must have claimed CA. Okay. Now, so when you have all the three, okay, then this is called control sale. Okay, the disposal is deemed on first day of the disposal final period. Okay. Now, what is the first day of your final period? Okay, how do you find this? You follow the DAD rule. Now, what is the date of disposal? Okay, fill in the date. Use the date, ask yourself, based on the date, what is the acquirer year of assessment? What YA is that? And then for that YA, what is disposal basis period? Basis period must be a date to a date, right? Now, the date is deemed date of disposal. Okay. Now we look at case 1. Okay. Example in case 1, page 368. Okay, page 368. Alright, the handout. Number 1, they say SAT is transferring a machine to its holding company Happy Limited on 19th of March 2011 for a value of 45,000, which is significantly above its market value. Now the market value is reasonably to be 21,000. So SSB, SAT lah, okay, SAT remember, bought the machine on 16 April 09 for 30,000, incurred 8,000 to install it. Happy, it's a company incorporated outside Malaysia. Machine is used by both companies for their business purpose. SSB year end is 30th June, Happy is 31st January. Now, so the fact that acquirer now is a company overseas does not alter the law that control sale can still apply, okay? Because we only want 3 conditions. And you didn't say that any condition here that you must be resident or you must be in Malaysia. So that's why there was a case law on that, that you can still be overseas entity and we can still apply control sale, okay? Now, so now the situation is this. SAT dispose to Happy. Now the date they dispose is 19th of March 2011. Now the year end for SAT is 30th June. Year end for Happy is 31st January. Enough already, okay? So I need to know what is the deemed date of disposal. And I need to know how much is the disposal value, okay? So usually you need all these figures to explain. Now, so my date is 19th of March 2011. Happy is the buyer. Now you just follow the buyer, okay? The buyer year end is 31st January. So which YA is that? Acquirer YA is 2012. Correct now? January is your year end, right? So March is 2012 already. Now logic. If 2012 you buy, seller will claim until 2011, correct? No? Seller will claim until 2011. So So if you claim until 2011, what's the RE? That's the deemed disposal value. So that's how you do it. Okay. But anyway, the examiner might want you to state the date of disposal. Now, the disposal basis period for Y12 is what? Now, 1st of July 2011 until 30th June 2012. So, the deemed date of disposal is 1st of July 2011. That's your first day of the final period. Okay, the deemed date of disposal is 1st of July 2011. Now you still dispose in 2012, right? Correct or not? Based on 1st July 2011, you still dispose in 2012, right? So the year of assessment is still Y2012. Okay, so this is how you work out the deemed date. Now then, what's the value that SAT going to dispose? Now you just work out and see. If I'm going to calculate the RE here, okay? Now SAT bought this for 30 plus 8, 38,000. The YA that LSB acquired is 16th of April 09. So that's Y09 that you claim IA and AA. And then 2010 you claim AA. And that 2011 you claim AA. See, you claim until 11. You dispose in 12, claim until 11. Okay, so what's your RE? 12920 5320 14440. So the deemed disposal value is 14440. So Y12 BA BC is 0. Okay, now what will the acquirer do? Acquirer will claim CA, of course. Okay, now continue whatever you have, but in this case that will not apply because Happy Limited is a company from outside, so they may not have CA. Okay, so they may not have CA. Follow not? So in that case, that's their problem because the law never say acquirer needs to claim. The law only say acquirer uses. You see not? So in this case, can only. Follow not? Okay, so to you, you will not get BABC. Now we're going to see another situation for control sale in case 2. Now Pop acquired a new director car for 140,000 on 1st of April 2010 and disposed it to Star on 19th of September 2010 for 100,000. Now Pop's year end is 30th June while Star has 31st October year end. They both owned by Mr. Moon. Okay. The issue that I want to show you is this. Now Bob bought this car on 1st of April 2010. Then you notice they disposed it in September 2010. Few months later only, they disposed of it. Alright? Now in control sale, the 2-year clawback does not apply. So that's why there will be no issue about clawback. So you don't have to say, wow, dispose so fast, can I claw back? Don't need. Okay? You have no clawback issue. Alright? So that one is not relevant. But when you see something that you dispose very fast, very soon after you acquire, you got to be careful. Alright? You dispose soon after acquired, be extra careful. Alright? Now why must you be extra careful over here? Okay, I'm going to show you one more law that affect us in this way. Okay, now I use back the same diagram. Pop, sell to Star. Now both acquirer, disposer controlled by Mr. Moon. So if you ask me which is the control situation, that's the control situation. Two different companies, that they belong to the same owner. That's why it's controlled by the same person. Okay. Okay. Disposal is 19 September 10. Pop's year end 30th June. Star year end 31st October. Now I just want to add one more date. The company buy asset has been acquired. It was bought on 1st of April 10. Okay, that's the date they buy. Alright, now why do I show this date? Later I'll tell you again. Okay, so repeat the rule that we used just now. (19 September 2010) is the date. Acquirer bought it in YA 201. October is your year end, so it will be 2010. So to disposal, Y2010 is 1st of July 2009 to 30th June 2010. So deem dispose on 1st July 09. Meaning, look at the date. If really this is the date you sell the asset, and really if this is the date you buy the asset, then this is something illogical. How can you sell the asset before even you buy? Correct or not? So that's what we're trying to say. So the law says, if your qualifying expenditure is incurred on or after the deemed date of disposal. Now, deemed date is 1st of July. Dispose, incurred 1st of August, after 1st of April. So incurred after the deemed date. So if it's incurred after the deemed date, on or after, then the disposer will have no CA. Acquirer can claim IA. Now, that's a very special rule about control sale, because most of the time acquirer just continue whatever left over, but in this case you can see POP has no CA, Star will claim. Now, how much that Star will claim? This is a director car, it's non-commercial vehicle. Okay, so if the car is new and the cost does not exceed 150, we will restrict this to 100,000. So Y 2010, you're gonna get 20% IA, 20% AA. Okay, right? Now that's the rule on control sale. All right. So control sale is a very important skill. Okay, especially examiner want to test RA sometimes. They can also bring in control sale. Alright. Okay, so we stop here and take a break. Come back, then we look at the next part.